Welcome to the Deep Dive, your shortcut to getting truly well-informed, especially when we're cutting through, the usual earnings call noise.
That's the goal.
Today, we're digging into the second quarter 2025 results for Similarweb Ltd, tickers SMWB.
Right, the digital data and insights, folks.
Exactly. And if you're looking for that kind of data, they're often, high on the list. Their latest call had some pretty fascinating stuff, especially around AI, which is, moving so fast.
Definitely a key theme.
So let's unpack it. What were the big headline numbers that really jumped out from Q2?
Well, it was a remarkably strong quarter. Honestly, they exceeded expectations pretty much across the board.
Okay.
The top line revenue was impressive. Similarweb pulled in $71.0 million for Q2.
$71 million.
Yeah, and that's a solid 17% jump year over year. Comfortably beat what the analysts were forecasting.
And it wasn't just about chasing revenue, was it? I mean, we see companies do that, but profitability seems to be back in focus here.
Exactly right. And that's maybe the more compelling part of the story this time. They actually returned to a non-GAAP operating profit.
Okay.
Reported $2.4 million, which, translates to a 3% margin.
Not huge, but positive.
Positive is the key word. And their non-GAAP EPS, earnings per share, came in at $0.01. That beat the Strait's 0-cent estimate.
So better than expected there, too.
Yep. And what's more, this is now their 7th consecutive quarter of positive free cash flow. They hit a $2.7 million.
7 quarters straight.
That kind of consistent cash generation, it's a strong signal, right? Shows underlying financial health, disciplined execution.
So given those numbers, pretty impressive figures, how did the market take it? Were investors kind of expecting this, or was it a positive surprise?
Oh, the market definitely took notice. The stock saw a pretty notable jump in pre-market trading.
Right.
And it closed higher that day with significant volume, too. So this positive momentum, it really highlights investor confidence, not just in the Q2 performance, but crucially in their strategy.
The strategic direction.
Particularly that focus on AI, yeah.
Okay, let's go beyond those headlines then. What about the underlying metrics? The health of the customer base, how sticky is the business becoming?
Yeah, digging deeper, the foundation looks incredibly robust. Their total customer base grew 18% year over year.
18%, wow.
Reaching almost 6,000 customers now, 5,951 to be exact.
Okay.
And what's maybe even more telling is the growth in their higher value accounts. The bigger fish.
The $100 cost ARR customers.
Exactly. Customers with annual recurring revenue, ARR, of $100,000 or more grew by 13%. They're up to 433 now.
That points to deeper relationships, right? More embedded with larger clients.
Precisely.
I did notice, though, maybe a slight dip in the net revenue retention, the NRR, for that specific $100 K plus group. Should we read anything into that? Is that a weakness, or is there, more to it?
That's a great question. It's a key nuance, actually. So while the NRR for that high-value segment did dip slightly to 108%.
Still over 100, but down a bit.
Right. Management called it a lapping effect. Basically, last year's upsells in that group were exceptionally strong, setting a really high bar for comparison this year.
Okay. So tough comps.
Exactly. But importantly, their overall NRR for the entire customer base actually improved. It hit 100%.
100% overall.
Which they said reflects their highest renewal rate in 3 years. So no, not a sign of weakness. It's just that 2024 had this sort of outsized growth spurt in that specific top tier. The broader picture is still very strong retention.
Okay, that puts it in perspective, thanks. And talking about the future, this is where it gets really interesting for visibility. Remaining performance obligations, RPO, that's their backlog, right?
Yeah, future contracted revenue.
It surged 26% year over year, reaching $273.8 million.
Right.
What does that kind of growth imply?
I mean, it's hugely positive. It gives us a much clearer line of sight into future revenue streams.
Right.
And get this, a significant chunk, 68% of that RPO, is expected to be recognized as revenue over just the next 12 months.
Wow, more than 2/3 in the next year.
Yeah. And to further cement that revenue durability, listen to this. 57% of Similarweb's ARR is now contracted under multi-year agreements.
57%. That's up quite a bit, isn't it?
It's a substantial increase. It was 44% just a year ago.
So customers are signing longer deals.
Exactly. This move towards longer-term commitments, it really de-risks their revenue stream, shows deep customer trust in the value they're providing.
And they're managing all this while keeping a healthy cash balance, too. Ended the quarter with, what, $59.3 million?
That's right, $59.3 million in cash.
Okay, so all these financial health indicators, they really paint a picture, don't they? A
Mhm.
company building for sustained, profitable growth.
Seems that way.
But let's shift gears. Let's talk strategy. Through that aggressive push into AI and large language model data, what kind of impact is that already having on the top line? Is this just talk, or are we seeing results now?
Oh, it's absolutely having a concrete impact. This isn't some future promise, it's a current revenue driver.
Wow.
Approximately 8% of their Q2 revenue was already derived from Gen AI and LLM training-related data.
8% already. Interesting.
And they noted, incredible customer interest here. They highlighted a specific multi-million-dollar, multi-year upsell.
An upsell?
Yeah, with an existing big tech customer. That client is now an 8-figure ARR client for them.
Wow, 8 figures. Just from, or largely driven by, AI data.
Seems like that's the core driver of the expansion, yeah. It speaks volumes about the stickiness and, frankly, the value of this data in the current market.
Definitely. Tell me more about how they're actually monetizing this. I heard something about one-time fees for some of this LLM training data. How does that work? What does it mean for recurring revenue down the line?
Yeah, it's actually quite a smart approach, almost like a, try before you buy for this foundational data.
Okay.
So customers initially pay a one-time fee. They get a bulk of data to test it, validate how effective it is in improving their own models.
Makes sense. Let them kick the tires.
Exactly. And once it's validated, and management mentioned over $1 million in such one-time fees just this quarter.
$1 million in trial fees.
Yeah. The expectation is that these then convert into long-term, multi-year recurring revenue commitments.
So the one-time fee is like an entry point.
Precisely. That big tech customer deal is a perfect example of that conversion process playing out.
Yep.
It underscores the recurring nature, the durability of these AI transactions once the value is proven.
Right. It de-risks it for the customer up front and then locks them in once they see the benefits. Powerful pipeline for future ARR.
It really shows confidence in the product, doesn't it? That it can prove its worth.
Absolutely.
Yeah.
And Similarweb hasn't just been, sitting on this data. They've been busy on the product development side too.
Yeah.
Launched several new AI-focused tools. What are some of the standouts?
Yeah, they're definitely innovating. The GenAI Intelligence Toolkit is a great example.
Okay, what does that do?
It gives businesses insights into how much of their website traffic is coming from Gen AI sources, like chatbots, and also tracks their brand visibility within those AI platforms.
So understanding their place in the new AI search world.
Exactly. Very relevant right now. Then there are the AI agents.
The AI agents.
Yeah, they're rolling these out to help customers maximize the value they get from the data, and these are showing impressive traction, like 60% month-over-month usage growth.
60% month over month. That's huge uptake.
It really is. So it's not just about selling raw data anymore. It's about embedding themselves, becoming this indispensable, digital brain for AI models.
Shifting the value prop.
Right. From just a data vendor to more like critical infrastructure within the whole Gen AI ecosystem.
So providing the ingredients and the tools to cook with them, essentially.
That's a good way to put it.
It's not all AI, though, is it?
Or
Are they still innovating in their core areas?
Oh, yeah, definitely. That's important. Beyond AI, they're still pushing forward. They launched Ad Intelligence.
Ad Intelligence, leveraging an acquisition from last year.
That's the one, yeah, of 2024. And they introduce additional modules for mobile app intelligence and also shopper intelligence.
Expanding those vertical insights.
Exactly. And a pretty major distribution win, too. Their data is now integrated into the Bloomberg terminal.
Oh, wow. That opens up a big new audience.
Huge reach to financial professionals, yeah. People who need these kinds of real-time digital insights constantly.
Expanding reach is key. And speaking of expansion, what about their sales engine? Their go-to-market strategy? Are those investments paying off?
Looks like it. The investments they started back in Q4 2024, yeah, they seem to be yielding strong results now.
How so?
Well, one key metric really stood out to me. The number of salespeople actually booking deals increased by 50% year over year.
50% increase in deal closing salespeople.
50%, yeah. That's a fantastic sign of an efficient and improving sales operation.
That's not just, tightening the belt. That's serious efficiency gain. What kind of operational discipline leads to that and contributes to getting back to non-GAAP profit?
It really speaks to deep operational discipline. Management made a point of emphasizing their disciplined execution,
Okay.
which they said contributed directly to that return to positive non-GAAP operating profit. And they highlighted, get this, A 4,500 basis point improvement in operating margins over the last 3 years.
Whoa, 4,500 basis points. That's huge.
Massive shift in operational efficiency shows a clear focus now on sustainable, profitable growth right alongside that revenue expansion.
That's a very significant improvement.
Huh.
Okay, looking ahead then, what's the outlook? What's the guidance from Similarweb for Q3 and the full year? Does it reflect this confidence we're seeing in the Q2 results?
Your confidence definitely seems clear in the numbers they put out, yeah. For Q3 2025, they're expecting revenue between $71.5 million and $72.0 million.
Okay, slight sequential growth.
Right, and non-GAAP operating profit projected between $1.5 million and $2.0 million for Q3.
Still positive on the profit line. And for the full fiscal year, did they just maintain targets or any changes there?
So for the full fiscal year 2025, the revenue guidance was maintained. That's $285 million to $288 million.
Which is about 15% growth year over year at the midpoint.
Roughly, yeah. But here's the real kicker. The non-GAAP operating profit guidance for the full year was raised.
Raised. Okay, interesting.
Yeah, raised to between $5 million and $7 million.
So they're more confident on profitability now than they were before Q2.
Exactly. It signals increased confidence in hitting those profit targets, and it suggests they anticipate acceleration in the second half of the year.
Driven by.
Driven by, they say, a strong pipeline and that improving sales productivity we talked about. It really does speak volumes about what they're seeing internally and in the market.
Okay, so let's put this in context for investors. What's the big takeaway here? The market reacted well, even with maybe a GAAP EPS miss somewhere in the details. What drove that positive feeling, and what should listeners be watching?
I think the positive reaction reflects solid confidence in Similarweb's ability to execute, especially in this generative AI space. That's the key narrative.
No.
And the fact that an increasing chunk of their business is multi-year contracts plus that strong RPO growth, well, that gives real revenue, visibility, durability, investors like that.
Reinforces confidence.
Definitely. And while, yeah, maybe some focused on the GAAP EPS nuance, the clear story was the non-GAAP profitability beat, the revenue beat, and that strong outlook. That's what drove the positive price action and, the bullish sentiment from analysts.
Makes sense. And what about near-term catalysts? Things to keep an eye on.
Well, you'd watch for continued strong guidance in Q3 and for the full year, obviously. Further adoption metrics for that GenAI toolkit and the AI agents would be key.
See if that 60% growth continues.
Exactly. And, potentially more positive revisions from sell-side analysts as this story sinks in.
And longer term.
Longer term, it's all about continued growth in those AI-related revenue streams. Can they keep converting those trial fees? Can they land more big tech deals? And also potential additional distribution partnerships like the Bloomberg one. Those could support durable double-digit growth and margin expansion over time.
And it sounds like management knows they need to keep communicating clearly.
Yeah, they acknowledge that.
Right.
Learning from past stock volatility, needing better communication, more clarity for investors, that's generally a positive signal for transparency going forward.
Okay, good stuff. Right, let's step into the investment committee room for just a moment. This is not financial advice segment.
Always the fun part. Not financial advice, folks.
Definitely not. But given everything we've unpacked about Similarweb, here's an idea. Maybe a little bold, but has some interesting logic behind it.
Okay, let's hear it.
You could consider a long position in SMWB, target price, maybe significantly above current levels, say $12, $15 range over the next 12, 18 months.
Okay, $12 to $15, that's definitely higher than where it is now. What's the outrageous part of this thinking?
The outrageous part. Maybe betting that the market is still significantly underestimating the long-term compounding effect here. Similarweb's unique position as this sort of foundational toll collector for AI.
Ah, the toll collector analogy.
Yeah, those one-time evaluation fees for the LLM training data, that $1 million this quarter, that could just be the tiny tip of a very large iceberg.
Right. If those conversions keep happening.
Exactly. If even a good fraction of those convert into multi-year, multi-million-dollar ARR deals like that big tech customer renewal implies, well, the impact on future revenue, future profitability could be truly transformative.
So the market might be too hung up on, say, that slight NRR dip for the big guys?
Potentially missing the bigger picture, yeah. The new customer wins, the accelerating pipeline for these really high-value AI deals.
Okay, so what makes this plausible then, beyond just hoping for conversions?
The plausible argument, I think, is rooted in a few things we've discussed. The high stickiness of LLM training data once a company builds it into their models.
Hard to rip out.
Very hard. Plus, the rapid growth of their AI agents, showing customers want tools, not just data, and the continuous expansion of those multi-year contracts across the board.
So it's not just a short-term AI hype play.
That's the argument. It's a bet on deep fundamental integration into the AI ecosystem. We'd be looking for a re-rating of the stock, something beyond just steady earnings beats. Recognizing that foundational role Similarweb's data is playing in this whole Gen AI arms race.
Interesting angle, a bet on the infrastructure layer of AI.
Precisely. Again, just an idea, not advice.
Absolutely not advice. Do your own homework.
So let's recap. Similarweb delivered a strong Q2 2025, pretty impressive revenue growth, a significant return to profitability, which is key, and those underlying customer metrics look robust.
Yeah, solid quarter all around. And that strategic pivot, the innovation in generative AI, especially with the LLM data and the new tools, it's clearly paying dividends already, and it really sets the stage for future expansion.
The confidence from management seems palpable too, right? Reflected in that raised profit guidance for the full year, suggests a positive trajectory, a company executing pretty well on its strategy.
Seems that way, based on this call. Now, as always, this discussion is purely for informational purposes. It does not constitute financial advice in any way, shape, or form.
Cannot stress that enough. We strongly encourage you, please do your own research, consult with a qualified financial professional before making any investment decisions.
Absolutely.
So what stood out most to you listening today in this deep dive into Similarweb's earnings? We always love hearing your thoughts.
Yeah, let us know.
Thank you for joining us on the deep dive, and we look forward to our next deep dive into the world of business and finance.